Well, good evening, ladies and gentlemen, and thank you, Stan, and thank you, ShareSoc, for inviting us here to FinCat's offices to present. My name is John Gahan. I'm the Group Finance Director of Sprue Aegis PLC. For those Latin scholars amongst you, Aegis means shield, so we do something that protects people, and we do something that could potentially save your life. Could I have a show of hands, please? How many people in the audience have tested their smoke alarm in the last 4 weeks? That's pathetic. It really is pathetic. How many of you have tested your CO alarm, your carbon monoxide alarm? Fantastic. How many of you own a property in France? Okay, it's law to have a smoke alarm in France, at least one. How many of you own a property in Germany? It's law in pretty much all states in Germany to have a smoke alarm. There's just the last few states closing now. How many of you have got a property in the UK that you rent out? Great. So all of you need smoke alarms and carbon monoxide alarms in your properties. This is legislation which has really helped drive sales of our business right through across continental Europe and the UK. So I'm going to tell you today about Sprue Aegis. We've got 20 minutes and then about 5 minutes of questions. Sprue Aegis, we are listed on AIM. The current market cap is about £140 million. We are Europe's leading designer and supplier of smoke and CO alarms and wireless connectivity. So we have products that can talk to each other wirelessly, so no hard wires, basically a radio module connecting products that are installed in the property. We are number one in 4 of our 5 key markets. Only in the UK trade sector are we, where we've just launched a brand new range of products, are we not number one. We've got 2 key supplier manufacturing partnerships. One company in China that makes all our carbon monoxide alarms, another company that makes all of our smoke alarms and accessories. It allows us to have economies of scale. Obviously, we've got the low-cost benefits of manufacturing in China. And actually, to put it into context, you think about it, the number of products that we're selling every year, in excess of 15 million smoke alarms and about 1.5 million carbon monoxide alarms, that is a lot of product coming out of 2 factories, which we can then drive quality and drive price downs through 2 dedicated suppliers. We've got about 150 employees. Most of them are based here in the UK. We have around 6 or 7 people that live in Europe, mainly sort of on the sales and marketing side in places like France and Germany. And we have a small subsidiary in Canada which manufactures carbon monoxide sensors. So this is the critical component within a carbon monoxide detector. We manufacture those components and we own all the intellectual property over that product based in Canada. So we've got 8 brands, 8 different brands: Fire Angel, First Alert, Pace Sensors, Sona, a number of brands, and we're able to target those brands at specific markets to give us price differentiation and differentiation in the customer's eyes. It's a bit like when you go to Comet to buy a washing machine and you discover that what you don't know is that pretty much all the products that are on display are all made by the same people, but it allows them to sell them at different price points with different functions and features, which has served us well. We sit on pretty much all of the industry trade associations, so we're well connected with industry. And in Europe, we believe that it's best for the French to sell to the French, the Germans to sell to the Germans, and as Brits, we don't tell them how to do it, we let them get on with it. So we have a number of established third-party distribution agreements with distributors in continental Europe, and they sell our products direct to customers. We believe our business is highly scalable and it's very defensible. There are high barriers to entry to our market. The certification costs to get a product certified for sale in any of our key major markets is probably approaching £100,000 per product. You need to know how to pass the tests. And once you pass the test, you then got to find a customer to take it. They won't just take one product, they'll want a range of products. So there are less than a handful of global competitors, of which, as I say, we think we're Europe's leading supplier. We've got about 52 registered patents and further patents pending. So we are a business with a significant degree of intellectual capital, and effectively we outsource the manufacture to third parties, which is why we say our business is so scalable. So just to quickly show you some numbers on the FD, so I thought I'd start on page 3 with some numbers. These are our half-year results, which we published in September. Effectively, sales have increased by more than doubled compared to the first half of 2014, and profits more than tripled. So our revenue 56.5, EBIT 9 million against 2.7 million last year. The 2.7 million is before the AIM costs, because we moved on to the AIM market in April last year, and that was £500,000. So the 9 million plays 2.7 is a like for like. The margins declined significantly in 2015 in the first half, primarily due to the fact that 3/4 of the group sales are into continental Europe. Obviously, if you look at the average rate of the euro against sterling the first half of this year compared to the first half of last year, it's much better for you guys going on holiday in Europe. It's not quite so good if you're exporting into Europe, selling in euros, and then having to convert those European sales back into sterling. To put that in context, if we were to run the first half 2015 financials with the same exchange rates as the first half of 2014, our operating profit would have been around £15.1 million in the first half of this year. So it's disappointing, obviously, with where the euro is and what's happened to the US dollar, but that is unfortunately outside of our control. We're hoping to try and drive the margin up, and I'll talk about that shortly. I haven't seen many businesses that have increased revenue by nearly £33 million and only increased the fixed costs by £1.3 million. I've never seen it. So we say our business is very scalable. It is scalable. Our operating margin's around sort of just shy of 16% there in the first half of this year. We're still targeting to drive our return on sales in the sort of medium term, north of 20 is our target number. Our tax charge is extremely low, our effective cash tax. So for those enthusiastic accountants out there, I'm excluding deferred tax. It's a non-cash item anyway. Just looking at the cash tax, what do we have to pay? Because we get R&D tax credits on all of the product development expenditure, and we're entitled to patent box, it means we pay a very low rate of tax. There is no aggressive tax planning. We're only taking what we are entitled to take. But effectively, the government's almost subsidising 50p in the pound of every pound we spend on product development. So it puts us in a really strong position. We're a dividend-paying stock. We've increased the dividend every year since we introduced it a few years ago. And we increased the dividend by 25% in the first half this year. I know a number of you are quite interested in the dividend, so I thought I'd mention that. And I think the dividend forecast in the West House note for this year shows an increase on last year as well. Let's talk about the balance sheet. This is a real business with real assets. Net assets are about 33 million. We have no debt. The business is very conservatively managed from a cash flow perspective. We're currently sitting at the half year on just shy of £29 million worth of cash, split between sterling, US dollars, because we still buy our carbon monoxide products in dollars, the rest we buy in sterling, and the euros. Interest rates aren't great at the moment, so we're not making much money on the cash, but we have some plans for that cash, and I'll come on to that a bit later. We had negative working capital at the half year, so effectively we've extended payment terms with our suppliers, and we spend a lot of our time managing the business to try and maximise the cash flow as well. So we're not just interested in driving profit, we're actually interested in driving cash too. We've got, at the half year, we have £5 million worth of intangible assets sat on the balance sheet. We can identify these costs specifically by product and by technology. They are people costs and non-people costs, the costs of certifying products. The way I see it is the fact that if we're making effectively 9 million of profit and we've only got 5 million of intangibles on the balance sheet, there's a lot of intangible costs that we've already written off that's currently supporting the sales going forwards. So on the cash flow, one of my favourite slides, again, I haven't seen many businesses that can convert £8.8 million worth of EBIT into net cash flow of operations from 14.6 million. Normally, the net cash flow line is sort of 50, 60, 70%, if you're lucky, of your EBIT. So we spend a lot of time trying to drive up the cash flow. There's a little bit of amortization and depreciation, which will gradually grow over time as the intangible on a balance sheet grows. Share-based payments charge, derivatives, and then there's that 5 million positive swing in working capital, which has contributed to a strong net cash flow performance. The tax paid is extremely low. Again, I haven't seen many businesses paying tax at that sort of level. As I say, we're only claiming what we're entitled to. And we continue to spend around £1 million in the first half of the year, up 10% on last year, on product development. So we are a products business. We invest in the technology. We differentiate ourselves by trying to be market leader in each of the markets in which we serve. So again, we have no debt, just shy of £29 million in the bank. Because we're selling in euros and we also have, so we've got euro sterling exposure, And we're also buying products in US dollars. We've got sterling US dollar exposure. We have a number of forward contracts in place which typically extend out 12 months, selling one currency to buy another. They're straightforward contracts, nothing clever, nothing fancy. We're not in the business of trying to second guess the markets. Systematically, every month or every other month, we place small amounts of contracts selling forward to try and give us more certainty to our earnings. That's all we do. So we've got a new chief executive who joined us earlier this year. His name's Neil Smith. Neil comes with a good pedigree from ex-B&Q, Halfords and Boots. So with the new chief exec, we've got a new mission, which is basically to protect and save and improve our customers' lives by making innovative products, innovative leading-edge technology simple and accessible. We've got a new set of values, and we're trying with the whole objective of having completed the strategic review of the business, a root and branch review to identify how can we build and grow shareholder value over the medium to long term. That is what we're interested in doing. Best ever quality and service and availability is one element of the strategy, looking and talking to our suppliers. Our chief exec was in the States last week talking with Jarden Corporation, who's one of our key shareholders, owning 23.5% of the business, and also owns our smoke facility in China, so a key relationship for us there. We're market leaders in 4 of our 5 major markets. To put that in context, if you bought a product from UK retail, there's a 70% chance you actually bought one of our products. We think we've got in excess of 70% market share of UK retail. We're still sole supply to a number of customers who've taken our products, including B&Q, Tesco's, and also we bagged Sainsbury's this year, which is going quite well. We've got the products that we've got. We can enter a number of new markets with those products and a number of new channels with the connected home solutions sort of coming online now as well. So we're looking at taking the existing products, certifying them for sale in new markets, places like Poland. It was staggering to us when we found out that effectively around 400 people a year die from carbon monoxide in Poland. The comparative UK figure is about 40. So we think that by entering a number of these other markets, the market entry cost is very low. We'll use third-party distributors most likely. We can certify our products for sale in those markets and then try and drive the legislation, which we've seen in France, in Germany, which we've been played an important role in trying to get that legislation established, which will then hopefully drive sales as well. So connected homes. This is effectively, if you go forwards 30, 40, 50 years, everybody will have connected home products and their homes will be connected. This is not just about connecting your fridge and freezer onto the internet so you can turning your washing on and off. This is real life saving lives. This is giving us the ability to enable us to monitor smoke alarms in your home. Now, when somebody dies in the UK, the smoke alarm typically comes back to us and there's a coroner's inquest. We're asked to investigate and interrogate the alarm. And one of the things we've discovered, is that, assuming it hasn't completely melted away, if we can get the chip off it, we've discovered that when you have a fire, most likely you've been having near misses the day before, 2 days before, 3 days before that, 2 days before. There is a pattern of false alarms. If we had an installed base throughout the UK where we could actually monitor those alarms, we could then be contacting the fire and rescue services and saying, can you please go around to Acacia Avenue? It's always Acacia Avenue, isn't it? We go around to Acacia Avenue and can you go and have a quick check on Mrs. Smith just to make sure she's okay? Because there's an unnatural pattern of alarms in her property. So we're seeking to move towards prevention rather than actually just detecting a fire as well. And we're actually doing a trial today with Humberside Fire and Rescue Services, where effectively we believe that potentially it'd be better off to send you a fire truck if your house is on fire rather than sending you a text when you're on the beach to tell you your house is currently burning down. So that's something which we're looking to commercialise, and I think that going forwards, the trial's going really well. The product is proven, but effectively we can put up to 50 products, all networked wirelessly, all talking to a gate or linked through a gateway device which plugs into the back of your router. We already have this, it's already tested, it's already working. It goes through a hub, and basically then all the data goes onto a cloud, and we are working with another third-party supplier, which is basically writing the software for us to be able to interrogate and monitor all the data that's sat on the cloud. So lots of security issues around that as well, so obviously we're focused on that. And we're using a specialist provider to help us with that. But we think it would put us in a very powerful position to be able to monitor products in people's homes. Moreover, in markets like Germany, it's actually a requirement for the landlord to actually inspect to physically check every alarm in their property. So if you're a landlord with a network of several hundreds of thousands of properties, in theory, you've got to buy the alarm and then you've got to go back and inspect it every single year and have a record that you've actually checked it. Well, if you're able to monitor them on the internet or have a PDA and stand outside the apartment block, you can actually wake up the alarms and you can then see when was the last event, what's the battery life, and you can get a whole lot of other information off it because our alarms also have a diagnostic capability, so we're able to transmit lots of information around a network and be able to see what the state of the alarms are. That could offer a major saving to professional landlords in places like Germany, and it's one of the things we're working on. So there's effectively 5 cornerstones, I'd say, of what we're trying to achieve out to 2020. Obviously, with Neil coming in with his sort of retail, his detail background, we are looking at where we can kill off sort of effectively any sort of lower margin products and introduce higher margin products. The launch of our new range of products into the UK trade sector, which is Sona brand. A number of you may have seen that. Sona's higher margin than our typical average margin. We're trying to drive up the average transaction value and the margin by business unit. We have 5 different business units. Each one we produce a separate P&L, and we effectively allocate as many costs as we possibly can into the business, and we're paying the guys on the profit and trying to maximise the cash flow of their business unit, as well as just maximising sales. So it is actually, it's all connected, it's working well. We're trying to accelerate the UK trade growth. We think today the UK trade is a market of similar size to the rest of the battery-operated market. UK trade, because of the building regs came in many years ago in the UK, and battery technology just wasn't there. Unlike the rest of continental Europe, all the technology base is based around mains-powered, hardwired products. Whereas with the battery technology we've got today, you can have a 10-year sealed for life product, which is what the market exists on in France and Germany. So UK trade, we've probably got a market share of around 10%. The market leader in this business is a company based out of Southern Ireland called EI. We estimate they've got around 70%. We have shown our products to a number of customers who are really excited about it. We have had some production setup issues. The product is certified for sale, we just can't make it in the required volumes, but we're expected to go into full production before the end of the year. So we're really excited about that. We've got taken the existing product set. There's a lot of other low-hanging fruit where we can go into some new markets like Poland, some of the Nordic countries which are already quite well established. Incredibly, some of the Scandinavian companies are sort of we refer to them as they can never be too safe. There's no legislation in a lot of these countries, but they all fit smoke alarms, and the CO penetration is pretty good as well. Places like Holland, it's not legislation. There's no legislation driving revenue. It's actually cultural. In other countries we've seen, unfortunately, it does require a change in the law. If you haven't got a smoke alarm and your house burns down, it does actually invalidate your house insurance. So what we tend to find is it is events driven, and actually we can actually see a spike in sales, as we've seen with all the CO campaigns. Many of you may have seen a TV campaign we've had running for the last couple of months around Project Shout. It's a CO awareness campaign, and we've seen on the back of that, we've seen CO sales increase dramatically. We're looking at launching the next generation of sensing platform across all markets. We're looking at, can we combine a number of different alarm technologies into a single alarm? So we could have a smoke alarm, a heat alarm, a CO alarm, all effectively within the same product. And there's some quite significant cost savings for us doing so. And the components and the technology that is within the alarm has moved on a lot since smoke alarms were first invented. And we think that actually combining that technology and making it wireless could be a major selling feature going forward. So we're currently working on that. We probably won't have anything until 2018, which is what we're showing there. And then lastly, launching the connected home. We've got a number of trials going on at the moment. We're trying to commercialise those trials, and we're pretty excited about what connected home could offer us going forwards. So I'm actually delighted to be joined here tonight by my chairman. Graham Whitworth is actually sat in the front down here. So if you've got any easy questions, I'll answer them. And anything else, Graham will be happy to deal with you. Yes?
I'll do the easy ones. So, I'm just looking at the note from Wikipedia. Why is your revenue going to drop so much in 2016? I mean, it's that plummet.
So why is revenue going to drop so much in 2016? The legislation came in France, and it was a requirement from March of this year to have a smoke alarm. We saw a significant increase in sales into France in the Q4 of last year, which has continued throughout 2015. Sales in France are softening, and they will soften significantly in 2016 because effectively a lot of people would have already installed a smoke alarm in their homes.
Are you actually seeing that?
We are seeing that for sure. Yeah, we are seeing that. But if you go back and actually look at what the sales into Europe were, we're effectively forecasting sales in 2016 in Europe to be broadly the same level that they were in 2014. So we're saying France was a bit of a spike in 2015, and European sales are going back to the level they were in 2014. We've got a couple of other things going on. Firstly, a lot of what we sell into France is effectively the bottom of the range alarm. It only requires most it might be a 1 year or 3 year or 5 year products with virtually no wireless features at all. So the French have just complied by buying one alarm for a house. In Germany, the standards in the next 2 states, and there are 10 million homes in Germany that will require alarms in the next 2 years, the Germans tend to buy wireless products. And so we sell more wireless products into Germany than any other market. So as France declines, Germany's picking up. And we've also got the replacement cycle starting in Germany in the next couple of years as well.
All of that, and that's why I go back to my question, why are you getting such a big drop in 2016? I don't believe that should be right.
We'd like to think that we've been conservative in how we forecast the sales, but we haven't, for commercial reasons, published what the individual sales are by market. But the principal reason for the drop-off is obviously sales in France are falling more than the increase in Germany, and that's why the sales are declining next year.
So you're happy with the estimates that are in the market?
Yes.
Okay, that makes you look a lot more expensive.
Okay. Sorry, another question?
2 points. Firstly, going on from this gentleman's question, obviously sales in Germany are on the ascendancy. How long, in terms of ramping up, for want of a better word, how long do you anticipate that they'll ramp up over 2017, 2018?
There's one state closing in 2016 and one state in Germany closing in 2017. This is where the legislation has already been approved. We have seen from past experience that the Germans try and get ahead of the legislation so that everybody's complying with the legislation. We're also entering the German retail market. Historically, up until this point in time, we've only supplied into Germany in the trade sector, in the trade market. If we look at the first half of sales last year in France, just over half were actually in in French retail, I should say. So we think that the German retail market, the margins might not be quite so exciting as the trade sector, but it's incremental volume for us, and that's something that we're looking at doing. So I think that if you go back, when we first started selling products into Germany, and look at what the price point is now, because the Germans are taking a wireless-based product, typically, we sell more wireless products into Germany than any other market. The price point will actually be significantly higher, and the German rules require a working smoke alarm in every bedroom, every child's room, every hall, and every landing. So it's not just a single product. So how many will we sell? We have estimates, but we've tried to be conservative in the way we put the note together for next year. The euro has obviously had a major impact as well. If we're forecasting now where the euro is around today, 136, 137, the average euro we had back in 2014 was around in the early 120s. So effectively, we've lost a great chunk of revenue and profit just because of the translation impact of the euro. Yes, thank you.
What are you going to do with the cash that you put on the balance sheet? Okay,
interesting question. As the finance director, I'm obviously quite pleased having lots of cash sat on my balance sheet and not worrying about meeting covenants every month. 2 things. Firstly, we said we are, because our factory is, the principal factory we have in China will be closed by the end of this year. New facility is already up and running. 4 of the 5 certification bodies have already certified the facility as okay for use. Which basically means they go out there and they audit the facility. To be conservative, we said we're going to take another couple of months' stock to increase the stocks, just in case when the equipment is moved across, if there's any disturbance to that process, we've got sufficient stock. That's the first point, which is probably maybe £4 or £5 million worth of incremental stock by year end. And secondly, we said a number of times we are looking at possible acquisition opportunities. If we found something, we've been looking not too hard. We're not chasing anything. We're quite happy with the business plan that we've got. It doesn't require acquisition opportunities to deliver it. The numbers that we put out in the marketplace, in the Westhouse figures and the figures that you may see in the Stockopedia reports, are actually all our current resources, current technology. It's the current plan. If we could find something which could enhance that, we would look at it, maybe in a technology space or perhaps in a new product. But typically we find, for example, we've got a very innovative cooker shut-off product, which we've basically taken, and we're the UK master distributor now for a business that developed that product out of Finland. Originally they wanted to sell the business, but because there'd been no sales of the product, there's no established track record of it. Actually what we've discovered is putting it into, this is a product that's basically sensing and trying to detect the signature before ignition for oil cooking, basically. So they've been installed in Brighton University, and they've reduced the number of call-outs for student false fire alarms by about 70%. And the university gets fined every time that the fire trucks come out on a Friday night because someone's basically come back and put the chip pad on and walked off. So there are things like that you can. We're also trying to get that product networked in with our wireless connection. So again, in terms of monitoring in the home, that would be a solution going forward. So at the moment, until we found something, we're going to maintain that cash figure, but let's see. Thank you.
Last year you moved from ISDX to AIM. What was the reason for that?
Last year we moved from ISDX to AIM. What was the reason for that? Back in the early part of 2013, Sprue Aegis was on the end of a hostile takeover bid. At that time, the share price was around 60p, and our biggest shareholder, Jarden Corporation, had offered 90p to try and persuade shareholders to sell. They didn't increase the offer. The board rejected the offer, by the way, and they only managed to secure 1.26% acceptances, including a lady who called me and said, "You ticked the wrong box. What could you do?" And I said, "I don't think it matters. It isn't going to change the result." Nevertheless, so as part of the bid defence, we said we would look at going to AIM because a number of institutional shareholders had said to us, "We'd like to hold your stock. We can't do it whilst you're on ISDX because we're not allowed to hold ISDX stocks. But if you were to go on to AIM, we'd be interested in doing that." And when effectively we moved to AIM, we went to see 25 different institutions, and I'm delighted to say actually we were 3 times oversubscribed, and 16 of those 25 institutions subscribed. So we broadened the share base with a number of new institutions joining us as part of that process, and a number of existing institutions who've topped up as part of that process.
Sorry, can you run me
Talk a little bit about recurring revenues, in particular moving from selling just the smoke detector to being connected and getting a recurring revenue from that?
Yes, the question on my right is what about recurring revenues? One of the beautiful things about a connected home, and we're still in the trial phase, so we haven't finished doing the financials, is the potential of recurring revenues. Somebody who has got a product installed in their home, perhaps they're paying a fee to be connected to the fire brigade. They're paying a fee to have an app on their phone that basically tells them what they can see. We are still looking at the cost of the gateway. We're still looking at how much are people prepared to pay to have such a product. We also want to make it super simple to use. All the feedback we've seen in the marketplace with connected homes is it's too damn complicated. People don't understand it, or it's priced at a level where people just think, "Do you know what, it's not worth it." So we need to come up with we're working on the economics that would hopefully, once somebody is installed the products in their houses, if it's a 10-year product, potentially we've got maybe a recurring revenue there going forwards for monitoring the products in their home. And maybe it's fair to say, I don't want to say too much about it because we haven't finalised the numbers, but we're quite excited about the possibility.
Well, couldn't you get in by the insurance company?
Interestingly, we've spoken to the insurance companies, not just in the UK, overseas as well. And if you ask them, actually the risk of your house burning down is probably less than 1% of the insurance policy. So they're not particularly excited about it. The biggest risk is actually water and sort of damage from the weather, etc. So it's not something, it's an angle that we've looked at. It's a nice idea, but thus far, it hasn't, it's not a driver of revenue for us. But I think we are quite excited about the opportunity for recurring revenues. And also, once you've got a product and it's installed in your home, we're then monitoring it. We know who's got the products. If it's coming up to the end of life, we can actually send you an email to say you need to buy another product. We're also building in now technology, so the product will chirp to tell you, my 10 years is up. Can you please go and buy another product? And the way we design the products, you can just unscrew the one off the ceiling, put it in the bin, dispose of it through your domestic waste, put the new product on, clip it on. And if it's part of a wireless network, I have 10 wireless products throughout my house, including the toilet. I've never seen a fire in the toilet yet, but nevertheless, the fact that it must be one of the safest houses in Britain. Every single room has a WST 630 connected alarm, and the benefit obviously.
Not physically the toilet then. I was wondering why. I have flushed 3 times.
So effectively, if with the benefit of having a wireless alarm, so obviously if the alarm's gone off, it basically within 6 to 8 seconds is basically alarming all the other alarms in your house. So it's a really effective way of protecting your home. Right at the back there, Mark.
Hello there. It's the first time I can recollect you speaking about Poland. How does the Polish market compare against the French and the German markets which you've described? Is it sort of somewhere in the middle, or how, in terms of their behaviour? What do you think?
Okay, so a number of the marketing team, actually, if I just rewind slightly, a number of the marketing team did a road trip for a couple of weeks in the summer. They went to Turkey, Poland, a whole range of countries. I think England have beaten most of these countries at football at some point. But they went to a number of these countries to try and identify, and they took pictures of the products that were available for sale, and to try and make an assessment of what is the level of penetration for CO and smoke, etc. And it's fair to say that the understanding and how products are merchandised in some of these countries is not great. There are effectively lots of products, sometimes just cheap imports from China, stuck on a shelf, no consumer information whatsoever. And so effectively, we think that some of these markets are very, very immature. Poland is a classic example. The fact that on average, over the last 10 years, 400 people a year die from carbon dioxide poisoning in Poland, which is completely avoidable, is scandalous. So we are working, trying to lobby the government in Poland to say, well, what are you doing about this? This is terrible. And so, we think it's a great opportunity for us. So the level of smoke penetration is very low, and also the level of CO penetration is very low. But we see that throughout Europe. I mean, in France today, the level of CO penetration is probably less than 5%, and Germany less than 5% too. Some of it is the structure of the market. So, for example, in an apartment block in Germany, maybe there's a big boiler in the basement, and effectively there's no fossil burning appliance in the property. That might be one of the reasons. So you've got to look at the specifics of each market. But we think that it's a good growth opportunity. And if one of these other markets, in the emerging markets that we're looking at, was about to take off, then effectively, if we've already got in there, and we put sort of bread on the water, as I call it, bread on the water in a number of other markets, when the next France happens, the next Germany happens, effectively, we are best placed to maximise our market opportunity with an established network and products already in there.
So if I've understood correctly, it's quite immature at the moment.
Very immature.
It's probably a slow burn process that will take some time before you can seriously penetrate.
I think that we are trying to work but we just launched a marketing campaign in France, we've got a marketing campaign in Germany, and what we've seen is actually by doing the same with Project Shout and Act Now in the UK, we've seen suddenly the level of awareness has taken off. So we're going to support it. We're not just going to launch a product in Poland, just sit back and wait and see how it goes. We are going to support it with marketing activity, which will hopefully drive revenue in the near term. What the revenue will be in 3 or 4 years' time is hard to say, but nevertheless, if you think a country with the population the size of Poland and the number of stores, and routes to market, it's still a very sizable opportunity for us. Another question at the front here.
I can't remember the name, I'm sure you'll remember it. There's a company that was taken over by Google at some enormous, for some enormous sum, which, as far as I could make out, their asset was a Wi-Fi connected smoke detector. I wondered what your reaction to that is, whether you saw it as effective competition in the future, or whether...
Yeah, the question's about a company called Nest, actually, which Google paid several £billion for. I think they paid about 16 times revenue. My mobile phone is turned on. I've got it set ready to recognise the code from the US. It hasn't rung yet, but if it does, any time, day or night, I will answer it. Interestingly, Nest launched their products, and what we've seen is that they are so expensive, and you have to replace the batteries every 3 or 4 years because it's not a 10-year battery, that if you were to put their products into your home, you could be looking at the cost of £400 or £500 to put their products in your home. Unfortunately, they had a product recall when the product was first launched, which hasn't helped them, but they've got Google's dollars behind them with a big marketing campaign. They're beautiful-looking products, and in the research that we've commissioned, where we've had independent people who've then done a sort of a trial, invited people in for a couple of afternoons for a cup of tea and a chance to look at sort of smoke alarms and CO products. Interestingly, when you say to people, all the products are free, which one do you want? A lot of people pick the Nest product, and then you tell them how much it is. It's like 80, 90 pounds for a smoke alarm. You're joking, not for me. And by the way, you need 4 or 5, and by the way, it's not sealed for life, so you've got to change the battery. So there are problems with it, but you know, for us, it actually supports the price point in retail, and we've actually seen more people trading up to a higher margin product as a result of having something else in the bay and B&Q, which is actually showing a much higher price point. So, you know, competition, we're not complacent about it, but you know, we're doing something, you know, very similar with our sort of connected homes, and that's what we're working on currently. Another question on the right here.
Why hasn't there been any EU-wide legislation on smoke detectors and CO? It just seems a classic one which EU would, you know, insist on.
The question here is not a political question. Is why is there no EU-wide legislation? Well, you know, we can't even agree on the shape of a banana throughout Europe, so I'm not sure how we can try and agree on what a CO or smoke alarm legislation should be. So each country, there are some European standards. There are some sort of European standards that exist, but every single country, without exception, sticks 2 fingers or 1 finger up at that legislation and sets its own legislation, principally sometimes to protect its own domestic suppliers. So, for example, if you want to sell a product in France, you need to get NF certification. It's another barrier that's basically put in there so that to try and you know, encourage people to have that certification. We pay 11 cents on every product we sell into France. We sell in France with the NF kite mark. I think it's just cultural. I mean, there are some standards that are there, but you know, we see such variety, and therefore, if you want to take the products from one market to the next, you know, the standards, the tests that you have to pass are similar, but they are not necessarily all the same. And so, one of the things which is a great barrier to entry in our business is the fact that you can't just walk into Germany. You know, we've got a full-time compliance guy who basically knows all the compliance people throughout the whole of Europe and spends most of his time on sort of aeroplanes taking products backwards and forwards and explaining the technical differences and sometimes explaining to the standard setters and the people who are actually testing the product how the products work in more detail. It's a barrier to entry for us. I don't mind, frankly. It was annoying, one of those annoying things when you first get into it, but actually it actually helps us. David?
We can control what happens in our own home and how many detectors we have, CO2, etc. But when we're on holiday, you've got no control over it. There was the big case, I think it was Turkey, where 2 young children were killed when they were in
Corfu.
Corfu. Is there a way you could liaise with the holiday companies, maybe offer through the reps instantly a detector to be available so that it can be ensured that people have a safe holiday?
Well, interestingly, we've seen that some companies are putting CO alarms in properties. Some of the hotels are, is some of the feedback. So that's interesting. You're worried about particularly people travelling overseas? You can always carry it. They're only quite small. You can always buy one in B&Q or Screwfix and take it with you.
Well, yeah, thinking of all the things to take, you'd have to have a big suitcase. But if you have a rep that's already got all those available to you, if you're worried about it, or if you know, just to guarantee you've always got one in your room, it just seems like it'd be a nice thing for Sprue to be attached to. Have a safe holiday.
I think it would, and I think we have tried something like that before, Graham, haven't we?
Let me try and answer that. We do, all of our alarms do actually have a little disable switch in them, because you can't actually take batteries on an aeroplane. There's a lot of thing about lithium and batteries and whatever. But the reality is, we say to people, you're right, you can fill your suitcase with these things, but we do say to people, take it on holiday. And we do promote that quite actively, to take it away on a holiday with you. More to do with carbon than smoke, to be frank. But the reality is, we do talk to some of the tour operators as well, and they do pick up on it, you know. But at the end of the day, a lot of people leave their brain at home when they go on holiday, myself included. So I'm being quite honest about this. But our industry is an events-driven business. It's very sad to say that. And when you get a tragic event like Corfu, and I have to say that all the litigation recently with Thomas Cook and all the rest of it raises profile, and it does it. You can see it through the sales. So I think the reality is awareness. And John said Poland's a perfect example. In Poland, it is an awareness-driven campaign. It's not legislated. It is very difficult to get harmonised standards, let alone legislation across Europe. But the reality is, Britain, until about 2 years ago, had no mandatory requirement for a smoke alarm. That 85% of all domestic properties in Britain own at least one, and that's awareness driven. So I think holiday awareness is one big thing. I think, awareness of alarms, which you can derive in the likes of Poland and whatever. And we see the one thing that Neil's done since he's taken over, you know, and I was the CEO and right until Neil came in. And the simple reality is he's given us an addressable market of an additional 260 million people. Because before, we were small, we went to the UK, we went to discrete markets. But now our market is opened up by another 260 million people. And in that 260 million people, as long as we give the information and we make awareness campaigns available, as John said, we think that we will get that momentum. Holidays, that is a big part of it. I'd love to do more, you know, in airports, because you do see people, you know, and you think it wouldn't have cost you next to nothing to do it, but you can't force people to do it, and there's no regulation. But I do think that the holidays and the tour operators have a moral responsibility themselves to ensure that the establishments that people are staying in are actually safe as well. I think it's a good point.
Yes, sir, the front row just there.
Just to make you feel good, I bought 3 of your products yesterday.
Wonderful.
2 smoke alarms and a carbon monoxide detector. But I have to say, your merchandising in B&Q was brilliant. Really, really good. Splash of it in a big area, all with fire angel.
Thank you very much. Which ones did you buy? Can you remember, did it have a light or any other sort of features? Or
No, it didn't have a light. They're a bit more expensive.
did it have a hush button? Well, that's why we want you to buy one of those. It's a bit more margin.
So your carbon monoxide one, I think, it's a brilliant product.
It's nice, isn't it? Did you buy the digital one? It's got like a little display that gives you the temperature. Okay. I mean, but interestingly, you know, we did a deal with B&Q. It's a classic example. 4 years ago now, we did a deal with B&Q where they actually went sole supplied with us. As they rolled out our products right throughout the whole of the B&Q network in the UK. Obviously, that Screwfix is part of their group as well. And what we've seen is that by providing more information to people, and it's great to have the feedback, thank you for that, sir. By providing information to people, they actually trade up. They don't just buy the cheapest one. So on the research that we've done, if you allow someone to stand at the bay and say you've got 10 seconds to decide which product you want to buy, a lot of people are kind of looking and I don't know, I'll take the cheapest one. But if you actually look at the information we provide in the bay, and we spend a lot of time listening to the feedback from our consumers, that actually we've seen the average transaction value through the till, so B&Q are pleased, actually significantly increase because customers then pick a better product.
One last question.
We haven't heard anything about the Americas. Is that an area?
So today our business is very much focused on continental Europe. Our addressable market is potentially global. We don't have any plans to go into North America today. Or South America, not at the moment. But I think looking at what the opportunity, the market opportunity in front of us in the UK and continental Europe is more than enough for us to go at. I'd never say never, but for the foreseeable future, we're going to focus on the European market.
Let's come back to, before you close, just one response. You said about the dip in the revenue. If you look back at our predict forecasts in the past, we've uprated, last year we uprated 3-4 times, John, and this year we've already uprated once. You know, we historically are not a business that stick our heads out too far into the future. There is uncertainty for us, you know, in the fact that France, it was there, it's gone to there, it will come back to somewhere in the middle. Where is that tipping point? What is the rate of uptake in Germany? You know, the uptake in Germany, I believe, will be fast and decisive. But the reality is there's uncertainty. And I can tell it, John is our finance director, I'm the CEO, sorry, not the CEO now, I'm the chairman, and I keep forgetting that. And the simple reality is that the numbers, if you go back historically and look at the projections, they're consistent, but you've had this big rise in it. Our big push, as John said, his first point on there was margin enhancement. Next year, our main focus as a business is getting back the margin we lost through euro translation. If we can get that margin back from below 30% to north of 30%, back up to nearly 40% where it used to be, the profitability of the business, even on a lower revenue, you'll be a very happy bunch of shareholders. So that's our principal target. Thank you.
Thank you, Graham, and thank you, John.